everyone, I'm the Tax Pro, and today I am going to give you an introduction to the chart of accounts within Odoo. So this is Odoo Accounting. So I've navigated to the accounting module right here for our demo company. And this company is pretty new, so there's not really a lot in the chart of accounts. In order to navigate the chart of accounts, you're going to go to Configuration, Chart of Accounts. This is what the chart of accounts looks like. And this is where you can create new chart of accounts. So I'm going to show you how to create a new account, and I'm going to walk you through the different types that Odoo has on here. And then for each main category of accounts, I will have a separate video explaining what accounts you need to identify in your business and walking you through that process and then walking you through setting them up. So in accounting, our 5 main accounts are assets, liabilities, equity, income or revenue, and expenses. In order to create a new account here, we're going to click on New. Right here, the first thing it's going to do is it's going to ask you for a code. And a code is a number that corresponds to the specific chart of accounts. And this code is something that you will need to enter in Odoo. Some accounting softwares allow you to enter an account into the chart of accounts without a code. Odoo does not. So you'll have to enter a code number. And code numbers are generally based on numbering systems and like standard numbering systems in the accounting industry. So I'm going to add a checking account here. The first thing I'm going to do is I'm just going to put account 101. And then my account name is going to be checking. I generally like to put the last 4 of the account number so that I know what account I'm dealing with. And then right here is going to be the types of accounts that Odoo allows us to make. And Odoo does a really nice job of kind of categorizing those accounts for us. These underneath balance sheet, these first 3 are balance sheet accounts. So these are going to live on the balance sheet report. Those 3 types of accounts, broad types of accounts, are assets, liabilities, and equity. Assets are things of current or future value. So here you'll see that Odoo gives us a couple different types of assets. The first one being a receivable. So a receivable is something that our customers owe us. So we have sold to a customer and now they owe us money. Okay, so that's a receivable. Bank and cash is pretty self-explanatory. Current assets are going to be assets that are going to turn into cash within the next 12 months. So it could potentially be, you've lent an employee some money, and over the next couple of payrolls, they're going to pay you back. That would be a current asset. Non-current assets, on the other hand, are things that are not going to turn into cash within that next 12 months. For example, maybe we've made a loan, like a 4-year loan, to an employee or to somebody that we are working with. That would be considered a non-current asset because it's not going to be turned into cash within the next 12 months. Then we have prepayments, and prepayments are where we have paid for something that we're not getting until future periods. So generally in accounting, we go ahead and divvy up our time into months and then into years. So those would be considered accounting periods, those months and those years. And so if I pay 3 months of rent in advance, technically I've prepaid some of my rent. The portion that I prepaid is going to sit in a prepayments account if we are running accrual-based financials. Fixed assets are going to be things like property, plant, and equipment, vehicles, land, buildings, machinery, stuff like that. So those are assets. So those are the types of assets that Odoo gives us access to here. Next, we're going to have liabilities. Liabilities are items that the business owes to somebody else, either a person or another company. And we have a couple of different liabilities here in Odoo. We have payables, which is where we've purchased something from a vendor and we have not paid for it yet. So we now owe that vendor money. Credit cards are liabilities. So sometimes I'll see people want to put credit cards up here with banks. Technically, you owe the credit card company that money, so it is a credit card is a liability. It is not an asset. Current liabilities are liabilities that we anticipate paying off within the next 12 months. And non-current liabilities are liabilities that we don't anticipate having paid off in the next 12 months. So a current liability might be like a short-term bridge loan. Maybe we get a 90-day loan or something along those lines. It could be taxes that we owe that we haven't paid yet. Non-current liabilities, on the other hand, are going to be things like we took out a loan to purchase a vehicle and it's a 5 or 6 year loan. We have a 30-year mortgage on a property, that kind of thing. After liabilities, we move on to equity. And equity is kind of a weird section. Equity is going to be what we think of as, what the owners of the company technically kind of own. So if we were to liquidate all of our assets, sell all of the assets for what's on the books, and then we were to pay off all of the liabilities for the exact amount on the books, what's going to be left for those owners? And that's what sits in equity. Now, equity is an estimate of that, right? Because in all reality, you're not going to get every penny on the books when you sell the assets. You may get more or less. You're probably going to settle with some debtors instead of paying them off in full, right? So equity is an estimate in that regard, but that's the easiest way for me to explain it that I think will make the most sense to you. In equity, we have two separate subcategories. We have equity and then we have current year earnings. So everything in the equity section is going to fall under an equity account unless it's our current year earnings, okay? Next, we have profit and loss, and income and expenses live on the profit and loss. This other off-balance sheet account is something that you're not really going to need to use, so I'm not going to go over it. We're looking at income and expenses. So income is categorized into two separate areas, income and other income. And when we think about income, that is money that the business earns, right? And our regular income is going to be money that the business is earning doing activities that the company is in business to do. For example, you may have a construction company and that company is in business to do construction, to build things, or to repair things. It is not in business to collect interest. However, during the course of doing business, that construction company may receive interest income. And so all of the construction income is going to go under an income category, and things like interest and dividends and that kind of stuff is going to go into other income. Moving on to expenses. Expenses are the cost of earning the money. Okay, so they're the cost of earning the income for the business. And Odoo has three main types of expenses here. It has expenses in general, depreciation, and then cost of revenue. So expenses is going to be a catch-all for things that don't fit into depreciation and cost of revenue. Okay, depreciation is going to be where we record the lessening value of an asset. So essentially how we write off the value of an asset is we spread out that cost of that asset over a certain time period. And so we break it up and then we depreciate it. So that's what depreciation is. Depreciation is very similar to amortization and depletion. So amortization and depletion would also fall under this depreciation category. Cost of revenue is going to be the direct cost of earning the income. So in accounting, we have direct and indirect expenses. Direct expenses can be directly tied to a particular product or service. For example, a direct expense would be something like, I have billed a client for 7 hours of labor from a technician. and that technician's 7 hours cost me X amount of money. That's a direct cost of providing that service. However, that technician, when they go in and they get paid for hours doing things like continuing education or recording their hours or doing paperwork that's not related to a job, some sort of what we call an overhead activity. That's not a cost of revenue because we're not able to directly tie it to a revenue generating activity. It is necessary to generate the revenue, but it's something that we consider overhead. Another example would be when we are making a product. There are certain things that go into that product, and those costs can be directly tied to that product. We take certain ingredients and we might put it into a machine, and those ingredients can be directly tied to that product. However, the electricity to run the machine cannot be, because we're going to have electric bills that they're not divvied up based on, this machine costs this amount of money to make, whereas your electricity to your office was this amount. We don't divvy that up. So the electricity in that regard would fall under an expense account, and then the actual ingredients to make that product would be a cost of revenue. So those are the different types of accounts here in Odoo. When you are creating the account, you are going to want to make sure that you get the type correct. You'll notice that when I X out of this, it just automatically saved this checking account. If it does not automatically save, I'm going to add another one for you here. If it does not automatically save here, it's going to automatically save. Sometimes you'll have to press a little button up here to save some items in Odoo. But right here, it's automatically saving for us, so you should be okay. If you have any questions, please let me know. I hope that video was helpful. And please, if you found it helpful, feel free to like and subscribe. That helps us tell YouTube that people want to see our content. And I will see you guys in the next video.